Boom. We are alive, ladies and gentlemen. Buy when there is blood in the streets. That is the famous quote by Baron Rothschild from like 1893 or something like this. The moment when he saw Napoleon's men coming back from the war and knew that there were going to be volatile markets that were taking place. So one of the things that we're going to start off today by doing is taking a quick look at something which we don't normally start off with, but it's a valuable resource, which is Investopedia. The reason I want to use this just as kind of a backdrop for the conjecture that we're going to make here, this idea about buying when there's blood in the street. The original quote, I believe, was buy when there's blood in the street, even if it's your own. This is a style of contrarian investing, but I want to give some context to it because it can often be taken out of context. Also the buy the dip area. In a bull market, sure, buy the dip. Everything always goes up in a bull market. In a bear market, buying the dip can be a very long, arduous process. But if you're an investor, anytime that there's a downside is a good side, but anytime that there's any time where you can enter the market is also a good time. We've gone over a lot of this stuff in our previous videos, and I think for those of you that are listening closely, you'll know exactly how powerful this is. And even though it sounds like hogwash to some who just probably are not listening, it's very powerful for those who understand these concepts. I had my first buy in the bloody street moment this year, or last year, I guess. It happened here on March 11th, 2020, ladies and gentlemen. It was the start of the SARS-CoV-2 virus. And there it was. I've circled it here. And the reason this is important to remember, well, first off, let's go back and look at that. What do we have here? Oh my God, a 56% drop at the moment. We went from $8,000 to $3,000. And this was when there was blood in the streets. Now, this idea of buy the dip in a bull market starts to make sense because clearly, look, if you had bought every time it went down, you were doing great. You were thinking, yeah, I'm the best investor ever. I'm going to make millions of dollars here. It's just nothing but up. And if you have been a part of the private group for some time, you will have been making entries here, not just in Bitcoin, but in many other tokens across the board, because you're a venture capitalist. You like playing around, and you know the upside risk and the downside risk, which is asymmetrical. Basically means that whatever you can lose, and then however high it might be able to go. So right now, this moment of buying when there's blood in the streets, this is a bit more of a risky moment for those of you that are new. Again, please remember that we've been here for a while. It's not just like we started today charting and this is where we entered the day, like entered the market. Yeah, like it's $62,000. But there's a few things I wanted to go over that are important here back between these two ideas. So number one, let's just go over this. The going against the crowd. Clearly on March 11th, back at the beginning of the pandemic, when everyone was buying toilet paper, you should have been buying undervalued assets, whether it was Bitcoin, Tesla, Ethereum, Kava, Band, any number of anything pretty much has gone up extraordinarily high since the day when there was blood in the streets, the ultimate moment of fear. So here, this was another one that was kind of, I think, went over quite well, which is the bad times make for good buys. This idea here of contrarian investors have historically made their best investments during times of market turmoil. The crash of 1987, known as Black Monday, the Dow dropped 22% in one day. In 1973, the bear market lost 45% in about 22 months. Attacks on September 11, 2001 resulted in a sizable market drop. The list goes on, and most recently, again, March 11th of 2020 was the ultimate buy when there is blood in the streets moment. Had you done that, every day afterwards was a good day in the bull market, and we've gone only up. But now we're quite a bit of ways into this, right? So this idea of like buying the dip every time and buying when the markets are bloody every time is not necessarily the greatest mindset, because these often get mixed up, right? The blood in the streets moment was way back here. Not here. It's not happening today. No one's scared today. I was at a golf resort. People were ordering margaritas by the pool. It was crazy. Life is basically normal here, if not almost on its way to euphoric. So when we get into these potentially more euphoric areas, we want to be a bit calmer with understanding these contrarian mentalities, because generally if you're on the side of the buy of everybody, you might be doing the wrong thing. So here's a prevailing against the market trend or sentiment. And here we're actually leading into it. Warren Buffett has another great one. It says, buy when others are greedy and be fearful when others are greedy and greedy when others are fearful. A nice way to look at this kind of strategy as well. But I think understanding where we are in that greed and fear sentiment, we are in the greed area, right? Like we are well on our way into this bull market. It didn't start yesterday. So being up this high, it's not a big worry for most of us because we've been following these signals for quite some time. We didn't just enter here and go, oh my God, it's up, it's coming down. What's going on? I'm all worried about my positions. Not the case. So what value can we take from the sentiment of buy when there's blood in the streets on these smaller time frames? Is there relevance? Well, yes, there obviously can be. And this is where the idea of buy the dip came from. It came from the idea that someone new entering a bull market for the first time ever thought to themselves, holy shit, I could have bought at 9 grand, at 12, 20, 30, 40, 50. Sure, all of that was still great. Gravy, 50,000 to 54,000, great. It's still in profit. And that's the problem with the buy the dip mentality, which is often conflated with buy when there's blood in the streets. The blood in the streets is a very literal moment. You can recognize it by peak fear, by peak fear. I had not yet witnessed an experience like that. I think September 2011 would have been the previous, like most recognizable one for my the side of the world that I grew up on. I'm sure if I grew up in India, I might have a bit of a different stock market date where there was peak fear moments. I don't know, maybe it was a president or a loss of a president. I have no freaking clue. But it is a very visceral experience and is very noticeable. And I don't think we've reached peak euphoria yet either, although I do believe we are there. We're pretty damn close to it. Look, here's a great indicator, right? Yesterday, I was at a beach resort with a beautiful woman. In March 11th last year, although I was with a beautiful woman here, there was far from going on beach dates to like a Marriott or something. So again, the difficult part here is really making the distinction and the difference, because even though we're using technical analysis, we're charting human emotion. And this is one of the unique aspects about the fractal nature of what we do here, and why we always want to consistently reiterate the philosophical, more often, I guess, mathematical persistence of what it is we're studying. We are in a volatile area and we're going to see more volatility, but this is normal. There's nothing we haven't. First off, there's nothing we didn't expect to see. We've come right back down to the support range. We'll probably come right back up. Now, if we start to break the support range and we come back down here, and more importantly, if we couldn't close above $43,000 after that breakdown, then I'd be worried. But you also have to remember, as a strategy, I'm not trying to buy the exact bottom of March 11th, although clearly I think from now on, I will always recognize that moment here. And I'm like, oh my God, the fuck's going on? Everything is crazy. Like, oh yeah, that's time to buy. Okay. But where we are here, when a distribution happens, I'm not trying to catch the exact top. Let's say this is the top. Let's say the market is over. Oh my God, Bitcoin's going to crash back down to, let's say $1,000. We'll just go for something ridiculous. It's not going to do that. I don't believe it's going to do that. Let's just say that this is what is happening. Then I'm going to look for that moment that closes clearly below this trading range, not a moment before. And that's the difference, is I'm not trying to, I'm waiting for the bullish thesis to be invalidated, not validated. We validated it on March 11th when the peak fear moment happened. Everything outside of that peak moment of fear has been basically a return to normal and euphoric. So here's a good way to ask yourself. First off, do you think we're even back to normal, let alone euphoric? And yes, although it's a little euphoric, normal things are coming back. Like, I'm going to fly to Mexico. Right? So normal is somewhat here. Euphoric is probably a little ways away, because I'm not going to ice baths every day. I'm not going to ecstatic dances every Friday weekend and having a new house to rent so we're clearly not near euphoria yet, at least in the cycles of fear and euphoria that I've had since 2001. So when I see market drops like this, first and foremost, In 2017, when the market dropped all the way down to $3,000, there was no real scary moment other than the selling. And that's just what markets do after they have a giant markup. You don't even need fear. It's just the lack of buying pressure that will ultimately allow the market to collapse. So Bitcoin at this particular area still looks healthy to me. And not only that, I wanted to share one of Rasher's charts from our private group. I thought this was a nice chart. This is a logarithmic chart going back to 2013. And now, although it's not perfectly onset, I think it does show something uniquely interesting. Number one, we're at the middle of the channel. Areas where we have seen resistance is 2013 and even acted as support for a slight moment back in 2015. We also saw support and resistance levels back in 2017 and 2018 as well. So I also like that Rasher here has both our trading range and that Wyckoff breakout he's got charted right in the center there. You can see it if you look really close. Yeah, where is it? Oh, I can't, it won't let me, okay, there it is, yeah. His reaccumulation and widening megaphone pattern here that he has drawn in. I love that. So what's the point of all of this? Why am I bringing this up? Well, number one, I want all of you to recognize that the comment about buying blood in the streets is not about nights like tonight. No, this is simply market like day over day change. And it's, if I were to hide the time frames and the price changes, I could probably trick you that any of these were the same thing. I could go in on like the 15-minute, and I could be like, if I removed the time frame and I did the same thing here, I'm like, so you know, what kind of time frame is this? You probably wouldn't be able to tell, because this is what we know mathematically as scale invariance. Again, I really highly suggest everyone read more fucking books. First off, that's like one of my favorite things to do as an investor is I have time to read, so I should, right? Don't get caught up in these really small like market cycle movements of a few percent getting scared or doing something stupid either. That's another thing a lot of investors make. They do stupid things early on because they don't know what they're doing. So that's why we make videos like this, to hopefully help you not make stupid, expensive mistakes by being impatient. Now, could we come lower? Yes, absolutely. We said this the other day. We've said this multiple times, primarily actually back here when we were looking at this first trading range jump up. We're like, yeah, we could easily come back down to 43,000. I didn't know we would get to 57,000 before coming back down to 42.3. It was fine though. I even remember being like, guys, this is perfectly fine. This is normal. We'll also see support on the trend, both on the rising channel and the horizontal channel that we use as well. So here, again, in the horizontal channels and the rising channel, we are finding that support. Now, if we start to break down, again, this could be a different story, and we could see again changes where there's no reason why we don't see a larger distribution here potentially before we go even further. So if you're new, you should never be playing outside of your limits. Again, for anyone that's new, I don't suggest you use leverage. If you are a gangster, you can definitely use leverage in the markets. Like, look at how fucking sweet these trading ranges were. Jesus Christ. But look, you could see a distributional pattern where we did something like this. And then we came back down, like, let's see between $16,000 and $24,000. I bet if that were the case, we would see a much bigger explosion later. And this would be considered basically an A, B, what Elliott wave would call a 1, 2, 3. You've also seen in 7. I think Jesse Livermore does them in 7. Let's look at this one for fun. Jesse Livermore pattern. I like this one. We've used this lots. Again, it goes under the basis that markets are fractal in nature, which I think is probably one of the smartest things you can try to figure out. So while you're reading, because you have this extra time as an investor, definitely read Nassim Taleb. And I just finished Benoit Mandelbrot's The Misbehavior of Markets, the fractal nature of finance, which I thought was absolutely fantastic. I suggest everyone put it on the reading list. But here again, you see 7, 8, 9, 10 to the top. 10 to the top. And often Elliott was going 1, 2, 3, 4, 5. He was counting these impulse waves as a 1, 2, 3, 4, 5 marker and then ignoring the 10. Who was it? Jeez. Tyler Jenkins also had 7 for his fractal count on the hyperwave theory. Again, you're not trying to get exact tops and bottoms. Like, it didn't matter that it came down to $3,000 instead of 1,500. It just needs to be in the ballpark is generally the best way to find a top and a bottom, not like get it exactly. Okay. Yes. So because markets can be volatile, this trend change here, could we see a bigger drop down to 16, 15,000? Sure. It's not out of the park. We've, clearly it's not out of the park, but I'm not going to change my sentiment until I see something clearly break down. And even still, we could see a much longer trading range that still ultimately goes bullish and just goes to scare the crap out of people. Right. And the off markets they love doing that stuff. They love to take retail's money away from them because they're not as emotional about this situation as you, or let's say someone. So again, if we start to see a serious close below the trading range and do something like this, well, then it's a different story. We might be in for a much longer market changeover. But again, everything looks quite healthy. If we can quickly kind of see that. Ethereum, again, couldn't get above the top of its trading range right now, but this is actually quite common for the buying climaxes to see a creek come down quite lower and really try to push you into the bottom, like right where the POC is currently set at, around $1,200 for Ethereum. We saw $1,200 for Ethereum just 2 weeks ago, right? But it's that secondary nature of fear in the markets that comes out, that people, you start to smell that blood. And even though it's not the pandemic, it's not this critical moment in human history, people themselves get that scared regardless of what's going on, and it shows in the prices sometimes. And not just the people in the markets, but often the bigger institutions as well. Something can shock or shake them. So again, nothing out of the ordinary here. Again, we could see a push into 12,000. 1,200 for Ethereum to produce our spring. Like here we could be like, okay, well, here's our shakeout. We're still in the backup phase. Now, again, this is where things get a little tricky. This is why I always suggest, if you are studying, to really go back and do more retrospective studies, because reaccumulation patterns are definitely way more difficult to pick out than distribution. Like this at any moment could do this, and then now it's a distribution pattern, right? But the whole way along, all the way since basically $240 when we charted the first reaccumulation pattern, all the way down here, this was our first reaccumulation pattern. Again, you guys, if you're in the private group, you can go back and look at all of our PDFs. We charted this. It was a fantastic moment. Shout out to Rasher as well, because he helped point us back towards the US dollar chart for Ethereum, because I was still charting it on Bitcoin. It just didn't make any fucking sense. Here in the US dollar, it's a goddamn gorgeous chart. Look at how freaking perfect this trading range is. Look at this spring. For any of you that are studying and caught up now, you'll innately recognize this in the next market cycle, whenever that happens. But more importantly, you'll recognize it and you'll know what the fuck to do, right? Don't just think about today in today's market cycle. Think about the next 3, 4, fucking 10 years that you have ahead of you, and you'll do much better. So again, here's the other 390 in the accumulation after decline. Here's the area where I took most of my positions, around 308, like a clear confirmation and a breakout of the previous trading range as well. So yes, are we up high? Clearly, there's a lot more risk on the table entering these positions. Do I think we're going higher? Yes, I do. But more importantly, we want to keep a close eye, because at any moment, these can turn into a distribution pattern, especially on these bigger trading ranges. And we could come all the way back down to like $500 to $300 for Ethereum, maybe, before maybe going higher. But again, importantly, until the market changes, I'm remaining bullish, because we've been bullish since that moment of blood in the streets. And I personally do not yet feel euphoric, although I do at least feel somewhat of a fucking normal life again. So that maybe that is euphoria now. Maybe just normal life is euphoria now. I don't know. We'll have to wait and see. Okay, yeah, everything else, again, I don't want to have too long of a video today. I just wanted to kind of give my quick updates. It is a little late. Yeah. Nice. take a few questions. I am Timothy Sykes. Yeah, I like Tim. He does some great content. We actually had a few of our private members send us messages that have made like 100,000 plus trades, multiple people, and then some that have broken $1 million in the group. I think maybe we'll do $1 million challenge as well. It's pretty fucking easy in the venture capital sector. Penny stocks are trash. At least here we're playing a better game. I mean, I like Tim, but penny stocks, dude, those are trash. Like, why don't you move over to venture capital? It's so much, especially because you're a smart dude. Like, why fuck around with trash? Whatever. Just, I mean, he makes a lot of money doing it. I'm not knocking at him. You know, the fucking game works, but penny stocks, guys, like, don't fuck around. I mean, you could consider these penny stocks to some degree, but these are startup companies that have a significantly higher potential valuation, like Matic, Clearly, Fetch, Dot, Band. And again, if I guess we could just quickly roll through, we are seeing a return to the trading range bottom here on Band, on Sushi. Balancer's got a little bit ways back down to go. It could almost drop another 30%. Same with KNC. We could actually probably, looks like we're witnessing a bull flag here with KNC. That's my thought, and that we get a spring, which again would lead probably again to believe that are going to see that $1,200 point, but nothing to make me think we're not still in the bull market. I think we're just getting started. This to me just looks like we have finalized the area for a much larger trading range on things like Kava, right? On things like KNC, that it's not, we're actually in a larger market cycle still that's taking place here. And that gives me quite a bit of confidence. Now, again, don't trade with leverage if you're new. Anyways, we'll keep it at that. Thank you guys all for joining us today. Stay with the Arcane Bear. Hope you found that helpful. Remember to go to the social media channels and follow us there. Shout out to all the private bear family member. I hope you guys are having a great time. I know I've been out the last 2 days. Just wanted to make sure I got a video update out there. I wish my shirt said stonks. It kind of looks like it, doesn't it? No, it's a Volcom Stone shirt. It should say stonks. Fuck, I need a new t-shirt now. Anyways, this deal with the Arcane Bear, we'll leave it at that. Thank you guys all. We will see you on the next episode.